It's Lisa from Been There, Got Out. We're trying again with tonight's guest, Paul Mendelsohn. I think he updated his Instagram and hopefully he can smoothly get on. He is a CPA and accountant from New Jersey that I met recently. And there he is. Okay, so Paul, let's see if we can get you, and hopefully this will work. I think it's going to work. All right. Anyway, so Paul has, there he is. Awesome. That
Hey,
worked.
Lisa.
I'm so glad. Hi, Paul.
Hey, thank you for your patience with the technology and
Oh,
me updating and everything else.
no problem. We're just thrilled to have you on, and we know tax time is coming.
Yes.
And as I told you before, our clients are usually in the middle of some very difficult, high conflict legal situation, usually divorce or separation or something with custody. And so I thought you'd be perfect to come on and talk about a number of things that involve accounting, money, accountants, and things with difficult legal battles, because I know you have a lot of experience. So before we start, you want to just introduce yourself and tell a little bit about your background?
Sure. Great. Well, thank you very much, Lisa, for having me here. My name is Paul Mendelsohn. I'm a sole practitioner CPA. My focus is primarily on individuals and on small businesses. I do a lot of tax, enough financial advising, and just general business and other advice to know when to point my clients to the right professional to take it from there. I've been doing this for a long time, and I've seen a lot of different things.
I bet, and hopefully we'll have some juicy stories that people can learn from. So I know that one of the things we said we would talk about is how, especially during a separation, I know that often couples have the same accountant, but then when they split, it becomes a bit of a conflict of interest. I know in my own situation, my ex's family had used the same accountant for decades, and I felt like that accountant wasn't really being fair with me, and I had to use another one. Can you tell us a little bit about why it becomes a conflict of interest? Because first I thought, oh, maybe I'm just being paranoid.
Well, no, you're not being paranoid. In my practice, the couples where I am taking care of both of their taxes, they're filing married, filing joint for the most part. It runs the gamut in terms of there are couples where there's one person who I deal with, and I don't even know really anything about the other spouse. To more equal, the two spouses are involved to some degree, if not equally. So you can definitely have a situation, whether it's the CPA relationship was passed down from the parents to one of the spouses, or just that is the one the CPA deals with. But the truth of the matter is that both spouses are my client. And even if I don't deal with the other spouse, I just deal with one, I owe both spouses the same level of integrity and objectivity and fairness, and to avoid conflict of interest. So unfortunately for the CPA, the best thing is to contact both spouses and say, listen, since you're splitting up, there is a conflict, and I can't do your taxes anymore. You need to, unfortunately, find somebody else, because there's no way that I can stay with one spouse and the other one goes elsewhere, or I can try to do both. That's an impossibility.
So that is not what happened with the accountant that we were using, and that person was saying that he could still do both. So should that have maybe been a red flag for me?
Well, yeah,
Because I
no,
definitely felt like
that is a red flag. It's, I suppose in an amicable situation where both spouses sign off and both of them kind of know what their informed consent is, but absent that, you really should, the CPA should really move on and let them find others. And if you think there's going to be trouble, or if you think you're maybe biased towards one spouse, don't even give a recommendation. I mean, I
yeah,
think that can cause a problem.
Um, I just see a question now, and I'm not sure if you're able to answer it, but it's interesting, and I'm assuming that this question is asked that while people are still married, is it legal to have, let's say, the husband or one person prepare a separate tax return without the other spouse knowing?
Um, it might be legal, but it is going to cause problems, and it's definitely deceptive and not a good idea. And so I guess in theory, if there's one CPA who's doing two married filing separately returns, I'm not sure that normally I'd have a suspicion about it. My engagement letters, I ask for both spouses, even the one who doesn't know anything, to sign it. That doesn't necessarily mean that the person knows what he or she is signing. So you do have to keep in mind, once you hear that that there's a separation, that is a red flag, that there are problems that you don't even know about and can't anticipate. And if it's a more amicable one, then, well, it's a pleasant surprise.
Yeah, that's not who we're talking to here.
I know.
That's not who's talking to you.
Right.
Yeah.
Mm-hmm.
So any other things that people should be wary of as they're splitting regarding money or accountants?
Well, let's just stick with the taxes for a second.
Okay.
It's probably a good idea, especially if you're the spouse who was not that involved, to get your hands on a few years of tax returns. 3 is ideal, 2 is fine, 1 will probably help. And just go over it with somebody. So whether it's somebody in your lawyer's office who knows something about accounting or tax, or your new CPA, to say, hey, we've got income from these sources. And it's like, oh, I didn't know we had money at whatever, Fidelity. I thought it was all at Vanguard. So then you get an idea from there where some of the assets might be hidden.
Okay.
Yep.
We're probably going to get a bunch
Great.
of questions because it's such a great topic. What happens if the soon-to-be ex won't do their taxes this year? So they're still together and one person's refusing to do the taxes.
Okay, there are a few things. First, you can file married filing separately and report what is yours. So this gets a little messy when there may be accounts that are joint and you want to report half and hope that the other half gets reported somewhere. You need your CPA to be aware of that. You need to be prepared to respond to IRS notices. That may be a little tricky because most of them are mailed. So the notice may be mailed to an address that you don't have access to. There are other things. If you are separated and you and your spouse have not lived together in the last 6 months, then you can file as if you're divorced. And I guess really where it becomes an issue is everything that's reported as income to one or both of you has to end up somewhere on a tax return.
Okay.
Yep.
And I'm thinking, because this comes up all the time with our people and in my own situation where there is income that is not being reported on tax returns or there's fraudulent numbers. How do you handle things like that?
Well, going forward, you try to report as best you can based on the 1099s and so on. If it's a business and it's your ex-spouse's or soon-to-be ex-spouse's business, that becomes less of an issue for you going forward. In the past, depending on how much money is involved, it may pay to hire a forensic accountant to just try, by interviewing you, by looking at the lifestyle, by looking at the income that is on the tax return, to try to get a sense of where some of the assets might be hidden.
So what's the difference between what you do and what a forensic accountant does?
Well, forensic accountant is basically really trying to find fraud, to solve a different type of puzzle from what I'm trying to do. My puzzle is really, okay, from the tax point of view, do I have everything? And if not, what are we going to do?
Okay.
Okay, and we
Now,
work hand in hand, and the forensic accountant works closely with the divorce attorney. There also, in answer to your question about, what if the other spouse isn't filing, or what if not everything isn't there? There are ways to contact the IRS to get information about your tax return.
ooh,
And
tell us.
you
That's what
can,
everybody always wants to know is like, can I report them?
well, you can report them, but I'm just thinking about self-preservation to make sure that everything you need to report is there. There are different types of transcripts. You can give your new CPA power of attorney. Power of attorney is a very specific IRS form. There's two of them, serve a similar but different purpose. It's not a power of attorney that you do with your lawyer in front of a notary. That's different. So you give an IRS power of attorney, and then your CPA can contact the IRS, and they will talk to her or him.
I see.
And
So it's just like giving them access.
right.
Okay.
Right.
It's not, power of attorney makes it sound like they get to make
They
all the
don't
decisions.
get to make any decisions or spend your money,
Okay.
but the IRS is very strict about who they will talk to.
Yeah, it makes me think of my kids in college, how we need
Right.
a special FERPA code because the
Right.
college won't communicate. Even if you're the one paying the bills, they won't communicate with you.
That's right. Mm-hmm.
Yeah.
Yeah. But no, there are ways you can get a transcript. You can call. They are answering the phones now, and hopefully that continues. So you can call and get an answer to your question.
Okay, great.
Yep.
Now, one thing that that I remember, so okay, you said that it's important, especially if you're the spouse who didn't pay attention to a lot of the finances, or didn't understand what was going on, or didn't know what you were signing, which is probably many people who are watching and will watch this interview later. What was I going to say? You don't know what exactly you're looking at if you're just looking at something yourself. So let's say that back in the day I had done the right thing and sat down with my lawyer. My lawyer did do it at some point later. I wish I had done it sooner. But when we went over the tax return, I was kind of like, I don't even understand this. But are there questions I should be, like, what should I be saying to my lawyer to look for, or will the lawyer already know what to look for?
Well, I'm not sure how much most lawyers know what to look for in a tax return. It's just not their area. I guess the things would be really, what are you concerned about? Are you concerned that there's income not being reported, that, that means that there's hidden assets? Or is there income being reported and you don't really know about the assets? You can't, if the income's not reported, you're not going to see it on the tax return because it's not there. You won't have that clue. But if the income's reported and you say to your lawyer, I never knew we had an account there. Okay, that's something.
Okay,
Yep.
So I know in many cases the income is not reported or it's underreported. So there's fraud on the tax forms, but what can you actually do with that?
Well, you have to be careful because you signed the return, so you have to make sure that you're not incriminating yourself
Right.
if you decide to report your spouse. But an experienced lawyer will know how to use that as a negotiating ploy. And anything that, let me just say that CPA's work is confidential but not privileged. So the difference is that I, as a CPA, can get a subpoena and I have to respond, whereas an attorney who gets a subpoena in a normal course of business, about a client, so it's privileged. I'm not telling you anything. So that's really the difference. But the CPA who goes volunteering confidential information has a problem. Now, somebody who's entitled to that, like one spouse who decides to do something with that tax return, that's a whole different story. And the other spouse who's playing games should be made aware by his or her attorney that, hey, guy, you've got some risk here.
Right, because that becomes a criminal issue possibly,
Yes.
Not just family court and divorce.
That's right.
I know I talked to a divorce attorney that really specialized in financial matters, and she gave some things to look for, which jogged a bunch of memories for me. My own divorce attorney, when he was looking through the tax returns carefully, he said, wait a second, look at this mortgage. Your ex is paying ahead on the mortgage and then declaring it as an expense. Do you see things like that where people fiddle with the tax returns, where they'll overpay something or they'll overpay? This is another thing she said to watch for, overpay their taxes. So it looks like an expense, but then they'll get the refund back later. So it won't be part of the divorce settlement.
Well, that's definitely a possibility. It's more likely in a business. You've got your own business on a Schedule C, and you're playing games with underreporting the income or overstating expenses. With mortgage, nowadays, the deductible amount is what's on the tax form, the 1098. And if you're overpaying the mortgage, I think nowadays you're really just reducing the balance, which benefits whoever ends up after the divorce owing the mortgage.
Oh,
With
this is
taxes,
a situation where he had his own property. It was like his separate, well, it shouldn't have been at the time, but it
well,
was like
if you've got
separate.
a
So,
separate
yeah,
investment, sure. If you got
right,
separate investment like real estate, a
right.
partnership, or your own business, those are areas where you can definitely play games.
Yeah,
Definitely do that. Yeah, yeah. And
yeah.
in terms of refunds, so yes, whoever prepares the return can specify the bank account where the refund gets electronically deposited. So yes, you can overpay from a joint checking account and try to get the refund deposited into your own separate account and run with the money.
Yeah. I'm thinking also a big issue, big question that comes up is the person who files first. That's what goes into the system. Like often there's a question about who claims the children on the
Yeah.
tax return. And even when there's court orders, somebody won't listen and they will claim more children than they should. But then let's say our client is like, what do I do? Because it's already been filed.
Well, you should file it correctly. You can attach a PDF to the return, which probably will not get read, but you're on record when you file saying, hey, look, I'm entitled to this child. You can also attach a statement saying it's not just the court order, but the child lived with me all year long. I provided most of the support for the child. And then when the notice comes saying, we're adjusting your taxes up because you claimed a dependent you weren't entitled to, you don't get the child tax credit, for instance, then you respond to that.
So that's interesting. You're saying even if someone doesn't necessarily have a formal court order, let's say they're still in negotiation, that they can still write a letter directly to the IRS with an explanation, almost like making a case, and let
You,
our
you
IRS
can,
decide? Wow.
yes, well, there's no guarantee that the IRS will pay attention to any PDF that's attached to an electronically filed return. There's less certainty that they'll read an attachment to a paper return. In general, I strongly, strongly recommend against paper returns nowadays. Just e-file everything. There are certain forms you can't, but other than that, just e-file it. Attach the PDF. If there's ever a question of, oh, you didn't tell us at the time, and say, oh, yes, I did. But more importantly, just be ready for the notice and respond to it.
Okay.
Yep.
There was just a question also when you had said that the person who files gets to decide what account the refund gets deposited in. This person asked, is it possible for the refund to be deposited into two different accounts, or it only has to go to one?
I believe IRS lets you use up to 3 accounts.
Oh, really?
Yes. Yes.
Interesting.
Mm-hmm.
Okay. Another thing is, you mentioned that a lot of times as people are divorcing, they will still file as married, filing separately, or I can't remember the term, but I know that I was advised to not file jointly,
Right.
to keep it separate. What are the benefits as you're still in the middle of the separation process to either filing jointly or filing separately?
Well, if you're in the middle of the process, I'm not sure what there is for filing jointly, what benefit there is.
Okay.
The key thing is that you both sign the return, you're both on the hook for the return. So you're signing, taking responsibility for your soon-to-be ex's shenanigans and everything else.
Right, right.
The marriage tax has been significantly reduced, and what this is that when you file jointly, the spouse who earns less, that income is basically taxed at the higher rate because it's on top of the other spouse. Now, if there's a big disparity, and I did deal with this recently, where he's earning 400,000 or whatever, and she's earning 50,000. Well, there's a huge tax to filing joint that there isn't on filing separately. You want to file separately if you're in this situation.
Okay.
Yeah.
Okay. I mean, that makes sense. It's interesting because I think people still have this view that it's better, like you'll save a bunch of money if you file jointly.
It depends on the situation. If your incomes are about equal, you'll save some. It's not as much as it used to be.
Mm-hmm.
Okay, it was really the Tax Cuts and Jobs Act of 2017 that addressed that, and that changed a lot of the limits on the brackets and so on. So it's been a while already.
Okay, that's good to know, because we always encourage our people in these crazy situations to do as much separately as possible, especially protecting their credit. So that seems like a reasonable thing to do. Okay, you also mentioned about having to sign on, well, I'm thinking in the past when you were still married and clueless, signing tax returns but being responsible for it, and then later discovering that a lot of things on there might have been fraudulent that you didn't understand. Can you talk about like the innocent spouse relief or being held harmless? Does that come up with whatever you do? I know that's something that people are concerned with, because like I signed something and then their lawyer says, oh, we can see if we could use the hold harmless clause. Or what do you know about that?
Yeah, that's different on federal in each state, and New York City also, in terms of what they're going to do for that. It's relief if this is all after the fact. You've signed something and now you're coming to your attorney. But if you haven't signed it, you're much better off getting a handle on what it is first.
I'm thinking like 20 years of marriage. So all the years that you just signed and signed and signed, and now there's this divorce. It's like,
okay,
oh.
it's gonna depend. It might be a little harder to make it stick if you're talking about multiple years, but there definitely is a chance on the federal and the state level for some sort of relief from there.
Interesting.
I also want to jump ahead to the current year. If you're still married, you're filing joint, you're using the same, well, if you're filing joint, you're using one CPA, whoever it is, for that return. The CPA is supposed to send an e-file authorization form. It's Form 8879 on the federal level. And both of you need to sign it before the CPA can e-file the return. So that for the current year, if for whatever reason you are stuck, you're still with your spouse, you're still filing jointly, that's your last line of defense. You say, no, I want to go over this return a little more.
Okay, so there's another question. Someone's in the middle of divorce and their husband was the one who worked and she has no income. So how does someone like that even file if they don't have any income?
You file married filing separately, and even if your taxable income comes to zero or negative, you file the return. Importantly, you're in the system that you filed. The problem with not filing, even in a situation like this, is that they can come back years later. There is no statute of limitations if you don't file. So just file it, and you may want to just make sure that I'm not sure what the spouse with the income would put on there that's inappropriate, that affects you. But yeah, just go ahead and file separately with no income, no tax.
It again makes me think of someone who has no credit and is starting to establish credit. It's like you want to start getting yourself in the system to build it up, right?
Right.
Okay.
Right.
Another question that came up, because again, like I love this conversation because it's making me remember a lot of things from the past, is I remember during the process with us, I was looking at the tax return and I was still in contact with the accountant, and I said, you know, the numbers here are not true because there was rental income and they were putting 0 for a number of rentals that had been in the family for years. And I said to the accountant, do you have the documents that support these numbers? And he said, no, I just believe what your ex-husband says. And I said, but how can you as an accountant put this on forms and sign your name to it? And he said, that's my job. I have to take what someone's word is. But is that how it really works, where you don't check? Like if I just come to you and say, this is my income and this is what it is, you just put it down and you don't have any responsibility towards, or I hate to say it, but like integrity to make sure that it's true?
Well, the CPA does have very specific responsibility. In broad brush, and then I'll get more specific, it's you just have to be comfortable that the information you're given is not wrong.
Okay.
But there is a due diligence checklist, and just about every copy of your return that your CPA did, the checklist will be in there, where the CPA is saying what steps he or she took to get comfortable with various aspects of the return. And
wow,
they need to keep a record of what documents they used. And they can say, look, the documents are, I talked to the taxpayer. And that may be fine. But if you know there's rental property and there's expenses and there's no rental income, that's something the CPA should ask about. Now, look, if you've got a condo and you're having trouble renting it, and you've got insurance tax and homeowner association fees, and that's it, great. But if you've also got some repairs or some maintenance, that doesn't make a lot of sense. I mean, it could happen, but the CPA should dig deeper to say you really had no rental income. And that's something that definitely the CPA needs to look at. And this is true whether there's, divorce pending or just in general.
Okay. I was going to say, in situations like that where, let's just say, not referring to my own situation, but where fraud comes out because there were multiple rental properties and there was a 0 rental thing declared on tax returns, like how responsible, what recourse does somebody have towards like a CPA who doesn't follow due diligence?
Well, if you were subsequently hit with penalties and interest for back taxes, you could try to stick the CPA to reimburse you. You can report the CPA. I'm in New Jersey. It's through the Department of Consumer Affairs. In New York State, it is the Board of Regents. There are state societies of CPAs. The New Jersey one is very active, the New York less so, where you can file that type of a claim. And depending on, what we're talking about in terms of penalties, your new CPA may be able to help you mitigate and reduce some of that with the IRS or the state.
Oh my gosh, I wish I had known this years and years ago. This is so helpful. All right, let's talk about tax status changing. And you had said a little bit, touching on with possibly a letter to the IRS, but how do kids living with you more of the time, how does that affect your tax status? Like, what should people know moving forward?
Well, once you're no longer filing married, you're filing either single or head of household. And head of household means that you've got at least one of your children living with you most of the year, and you are paying most of the support for that child and for the upkeep of the house.
Is it under 18? Does it have to be under 18 or?
No,
okay.
and I'm just focusing on what's really of interest here. Head of household, you can be actually, if depending on the circumstances, if a parent is a dependent, then that can give you head of household status. So Head of household status does a few things. The standard deduction is about $7,000 higher than single. So that means you've got more income that isn't taxed. The brackets are broader, so you've got more income being taxed at the 10% before you go on to 12 and to 22 and so on. So it is a real tax savings. The other thing is that if you're talking about children under 18, if you have childcare expenses while you're working or looking for work, you can deduct them because they are your dependents and you are head of household. You'll get the child tax credit. You can probably get, yeah, definitely it's easier to get more money on the earned income tax credit. So, and these are all things that, by the way, on the due diligence checklist I mentioned a few minutes ago, there are very specific questions that the IRS is saying the CPA needs to ask to ensure, yes, this person really is head of household. Yes, this child really is eligible for such and such a credit or whatever.
Wow. Okay. What about Social Security benefits? My aunt had gotten a divorce and then had a boyfriend for like 45 years, but they never got married. And my dad always said that's so significant because she was still able to get her ex's Social Security benefits because she never got remarried. I'm wondering if you could talk anything about Social Security benefits after you split.
Well, you know, that's true that not getting remarried helped her. But if you've been married for at least 10 years, once you turn 62, you can file, and Social Security has 2,700 rules, and they change, and people give you different interpretations. But the idea is once you have those two criteria, married 10 years and not remarried, age 62 or up, then you are eligible for half of your spouse's Social Security, just as if you were still married.
Really? So if I don't get remarried, I can still get my ex's Social Security benefits because we were married about 18 years?
Yep, absolutely.
I'm not getting remarried.
And
sorry, Chris.
The best part of it is you don't need your ex-spouse to sign off on anything.
Great. Because they never would anyway.
Right. All right.
That would be very painful for the ex, for everyone's ex here to do, is to give permission to give their ex more money.
Right.
Yeah. Okay, let's talk about 401ks and QDROs, qualified domestic relations orders.
So a QDRO is something that your lawyer and your spouse's lawyer will take care of as part of the divorce. It is an order. It's got lots of pages, but basically it goes to the record keeper or the fiduciary, whoever the right party is, of your 401k or your IRA, to say, hey, by this order, half of the balance goes to my ex-spouse. And so what happens is that all of a sudden, each spouse now has an IRA or a 401k with half of the balance. And it's yours and it's treated as yours for that purpose. So you're subject to the same required minimum distribution requirements, but you've still got the ability to hold on to it as if it's your own IRA.
Okay, yeah, I know post-judgment, being in court in New York for a while, there were certain things that we tried to get through a QDRO, but the other side kept fiddling with the paperwork, and there were like multiple attempts through Fidelity, and they kept saying the paperwork's not done properly, the paperwork's not, and it was like, forget it. Like, I thought that originally the judge had said a QDRO would be the easiest thing to do, but it ended up not working out.
I think it's really the only way to do it without having a taxable distribution. It is not easy. It takes a long time. And, if it wasn't done right, then Fidelity or whoever is going to say there's nothing I can do. And it just needs to be redone.
Free time. Yeah.
But once it is done right, almost everybody has people who are competent enough to take care of this quickly for you. I want to just sidetrack for a question that somebody asked about Social Security. She said that you checked and they said it wasn't half. The answer is it depends. This is not my expertise. It's one of the 2,700 rules, but I believe in order to get half of your spouse's, you need to be at your full retirement age, which depending on how old you are, is somewhere between 65 and 67. And if you go for your spouse's, half of your spouse's Social Security younger than full retirement age, you're going to get a reduced percentage.
Okay, that brought up a question that I know a friend of mine had, where her ex's Social Security, they were able to get it deposited right into their children's college account to pay for college. Have you heard of things like that? Like it could transfer to a dependent rather than the ex.
I really, actually, that's a new one for me. I'm just accustomed to people having Social Security direct deposited into their checking account.
Okay.
Yeah.
Interesting. Yeah.
But just like you could direct an IRS refund, you probably could direct it to a third-party bank account like that.
Yeah. Yeah. It worked out really well. It was used as leverage to negotiate.
Okay.
So. All right. So what about a 401k? Everybody screams about pensions during divorces.
Well, you negotiate like anything else. The 401k and the IRA are both ultimately going to be governed by that QDRO, by that Qualified Domestic Relations Order. It doesn't have to be a 50-50 split. It can be, whatever you negotiate, 75-25 or something else. My recommendation to everybody, whether it's a divorce or you change jobs, you're leaving your company where the IRA is, get it out of there, roll it over to, the 401k is, roll it over to an IRA where you've got control, you've probably got more choice of investments, and you never have an issue of somebody losing track of you because you forgot to update an email or a mailing address. And a number of these 401ks will give you, even for current employees, will give you access to the website to get your statement and so on, but don't send you statements, don't send you too many email reminders. So it's easy to get forgotten about. Once you get the QDRO and you got the money, take the money and run, put it somewhere else.
Yeah, and you're reminding me of something that's embarrassing. Right out of college, I worked for this big publishing company, and I think we started a 401k, and then I went off and moved to Europe, and just sort of forgot about it. So is there a chance that my 401k from like 30 years ago is still somewhere that I might be able to get it, or forget it, it's too late?
There is a chance. I'm not sure that they're governed by the same abandoned property rules as a bank account. There is one other thing that you'll have in a 401k, and that is fees. So your balance might be way down because of 30 years of fees, depending on how big your balance was and how poorly structured the plan is.
Yeah, I'm sure it wasn't a big balance. It was like a year before I left.
Right.
Went off a year.
Right.
Yeah. All right. So, Paul, this has been so helpful, and thanks for fielding the questions as they've been coming in. But is there anything else that you think people in these really difficult situations should know, or anything regarding accountants or finances?
Well, few things. Don't feel, it's easy to feel that you're alone or you're being attacked or bombarded, but don't feel that you really are alone. There are places to go for information. Each state society, bar association, and CPA society has committees that are related to family issues, and there are CPAs on there. Just go through the directory and call somebody just for advice or just as a sounding board, to make sure that if you need something else, you can go further with it. In terms of finances, I would say just don't do anything drastic while you're going through this period. This is not the time to get that red sports car or that expensive vacation to Europe. Unfortunately, put it aside until the dust settles.
Yeah. And speaking of what you just said about getting advice, do you know, I know you're not free, but are there any free resources? Like I know I found this nonprofit called CTLP, Community Tax Law Project in Virginia. That's a group of tax attorneys that can give general tax advice. And they said that they have places like this in most of the states. Have you heard of anything like that?
There are here in New Jersey, the State Society of CPAs runs something like that. And, you know, it's njcpa.com or org.
Yeah.
New Jersey CPA, if you just Google it, you'll get there and then just navigate to see what they offer.
Okay, great.
Yep.
All right, well, Paul, thank you so much. And can you just say how people can find you now? You do New Jersey, but do you also do New York?
I practice nationwide. I serve my clients mostly, you know, remotely. I have tax clients and business clients throughout the country. And yes, I'm in New Jersey, and New Jersey and New York are probably where most of my clients are, and I can definitely help clients out. 2 ways to reach me. My email address is P as in Paul, N as in North, M as in Mark, .cpa@gmail.com, or you can call or text me 973-943-1713.
Great. And I also have your Instagram handle if someone might try to direct message you.
Or just, you know, request to follow. I'll accept and I'll follow you, and we can keep in touch that way.
Great. All right, Paul, thank you so much for your time. Okay. This has been really, really enlightening.
My pleasure. Thank you.
All right. I'll talk to you later.
Okay, thanks.
Bye.
Bye.